Hello, welcome to Prime Business with me, Emma Davis. A look at our stories. Fuel prices are expected to go up marginally beginning tomorrow, February 1st. That's the projection by the Institute for Energy Security. This is due to a marginal increase in the price of finished petroleum products and the depreciation of the cedi. Whilst the price of petrol and liquefied petroleum gas will go up by 2%, that of diesel will also increase by 3%. Let's share some excerpts of the statements with you. Now, in the statements, the second pricing window saw some relative stability in gas oil price on the local fuels market. Continuous monitoring of oil marketing companies on the market reviewed price remained unchanged for the two main liquid fuels in the first week of the pricing window. However, few of them reviewed price of gasoline in the second week. Price data gathered indicates that gasoline price was reviewed downwards by an average of 11 pesos per litre, whereas gas oil and liquefied petroleum gas remained unchanged. And the Institute for Energy Security's purposive sampling and analysis of fuel price data compiled for the second pricing window for January 2024 puts the national petroleum product average price as follows: gasoline at 11 cedis 82 pesos, gas oil at 12 cedis 74 pesos, and liquefied petroleum gas at 13 cedis per kilogram. The IES markets can put Star Oil, SO, Benab Oil, Zen Petroleum, and IBM as OMCs selling at least priced over the last 2 weeks. Moving on, some taxes rolled out by the government this year were part of conditions to aid completion of Ghana's first program review under the International Monetary Fund. That's the opinion one may form after going through the latest report on Ghana. George Riafe has more.
Government has rolled out some 7 new taxes that has taken off from January 1, 2024. This was after President Akufo-Addo signed these tax bills into law last month. Key among them is the VAT on non-life insurance product, which should have resulted in 30% increase in insurance premiums, and also VAT on domestic electricity consumption. But a careful look at the IMF staff report showed that some of these taxes were a part of government proposals to the fund to help improve the country's revenue situation. The report also maintained that these taxes were part of revenue measures captured in the 2024 budget and submitted to Parliament as prior action for the first program review under the IMF program. The IMF have also raised concerns about Ghana's low tax GDP ratio. These taxes are already facing some pushback from organized labor. So if these tax measures helped Ghana pass the IMF first program review, which led to the release of some $300 million, then can government go back and review some of these taxes, like the VAT on domestic electricity consumption?
Let's go on Zoom and speak to tax consultant Francis Simoboy more on this. Francis, welcome and thank you for making time. What, in your view, would be a prudent way to work on the taxes introduced this year to get the labor unions to agree? It appears they are part of the IMF conditions to raise revenue, yet labor is also against it. Example, the VAT on electricity consumption. How can these taxes be implemented in your view?
For having me. I think the taxes as we are seeing, like you rightly put it, they are part of the IMF conditionalities. Of course, the IMF said that we could, in the medium to long term, take measures to bolster domestic tax revenue. But I think that because government wanted to, look good, we went with a very ambitious target by raising our tax to GDP from the current 13% to around 18 to 20%. So that demanded that we do a lot more. So we either introduce new taxes or increase the existing tax rates, or even, take administrative measures to enhance the collection of taxes. So all of these things came And I think that the citizenry had a lot to bear. We saw 2023 budget full of taxes. And now we are being told that the VAT on electricity consumption for household is going to be implemented. And I think that to address the labor unions, their concern, we've had a lot of the indirect taxes coming in. So we should, continue suspension of this particular VAT on electricity to household consumption. At least this is not the first time. We passed this law over 20, 30 years ago. So if we have had enough taxes during the year, especially from 2023 down to 2024, then suspension, I think that is in the right order, because you go and implement this thing and trust me, the impact on Ghanaians will be too hard, especially considering the automatic adjustment on tariff.
So do you think that some of the taxes must be removed, looking at the opposition from Labour and some section of the general public?
Yes. Take, for example, COVID levy. We've been advocating that this particular tax should go. We're not too sure why it's still there. And I know government 2024 is expecting over 4.4 billion cedis from COVID. 2025, they are expecting about 5.6 billion. So it looks very big for government, and therefore government doesn't see the need to, take it off. I believe that COVID is no more, and therefore its usefulness is gone. So such tax should have been removed so that it brings some relief to Ghanaians. Again, the VAT on financial service, the insurance. Already the insurance sector is struggling. So we should at least take some measures to relieve them a little bit. In my view, some of them should go so that at least businesses can have some, a little breathing space.
Okay, but in your view, do you think there wasn't prior engagement, or the engagements earlier were not adequate, hence the opposition?
I think so. I think that is the missing link. Look at even the approval of the budget. Parliament themselves, who were supposed to pass the law, they were divided completely. And so it tells you that consultation was not enough. Yes, I've seen instances where the Ministry of Finance issues, letters out for public to bring their their inputs. The question is, where does it end? Sometimes we think that consultation is not important, but clearly consultation is very crucial in every aspect of tax policy formulation. If you engage the stakeholders, including businesses and tax professionals, in a broader consensus, it enhances transparency. And when people are involved in formulating policy, they buy into it, and implementation becomes easier. And also, I think that it will bring out unintended challenges that may come when we go for the full implementation. Surely consultation wasn't enough from the way we are looking at it. Even look at the VAT on electricity consumption. Labour had to threaten that they're going on strike before government says they're going to do the engagement. And I believe that one of the engagements should be that, look, 22% on household consumption of electricity is too much. Maybe let's agree and say, let's do a flat rate. 5%, 10% can be managed.
Francis, this may be a long shot, but do you think that governments can re-engage the IMF to redesign some of the tax laws?
Of course. If it's part of the conditionalities, we can always do that. Look, Argentina has plans to renegotiate some of their conditions attached to their loan. I hear they over $44 billion loan. They're going to renegotiate. So, and renegotiation always comes in when there are changes in economic situations. We can go back to, IMF and say, look, yes, the whole policy was to do it in a medium to long term. We have introduced so many of the taxes, and we think that some of them we can put them on hold. For example, the VAT on household consumption of electricity, we can put them on hold so that at least we don't kill the business before this IMF deal ends. I think that we can always do that.
Much, Francis, for making time. Francis Timoboy is a tax consultant. Now moving on, the Mobile Money Agents Association of Ghana says its members have not been properly engaged on the linking of mobile money accounts to their Ghana cards. According to the association, about 60% of its members will be cut off from the money transfer system if the Ghana Revenue Authority and the Ghana Telecoms Chamber disconnects them from tomorrow, February 1, 2024. Speaking on Marketplace earlier today, President of the association, Dela Abochi, said most vendors did not know the process also involved reconciling their mobile money accounts with their bank accounts for tax purposes.
The initial communication that came was that if you have not linked your Ghana card with your agent line, then you are going to be cut off or you are going to be blocked. But from the look of things and the understanding that we gathered some few days, it is not the same thing. So there was a miscommunication out over there. So as a Mobile Money Agents Association, the president, I will have to appeal to the authorities, that is the GRA, network provider, that is our principals, and then those who matter to hold on so that we will get back to the drawing table to know and understand some of the things very well. This is purely miscommunication, because if they should go ahead and block all the SIMs, I can tell you that about 1/4 of agents who, not even 1/4, more than about 60% of agents will be going out of business from tomorrow going. Because only some few people who, when the GRA started the deductions, rushed to the banks for that reconciliation. Only some few, those who go to the bank. But what about those who don't go to the bank? And there are more than those who go to the bank. So it means that those people will be going out of business from tomorrow going. And this is a very bad news, so that we should be talking about.
The Executive Director of Japan Motors, Jalal Almoni, says the company has invested over 1.5 billion euros in automobile production in Africa, starting with its first product of the 4x4 Grenadier. In an interview with Joy Business, he disclosed that the African market is ready for the unique, innovative product with huge economic potential.
Japan Motors, in partnership with Ineos Grenadier, has launched the Ion Motors Grenadier showroom. This is the first retail facility in Ghana and the West African sub-region. The vehicle, the Ineos Grenadier 4x4, comes with a powerful BMW engine and 8-speed gearbox, comfortable with the Recaro seat with a contemporary high interior. According to the Executive Director of Japan Motors, Jalal Almoni, the market is ready for the Grenadier 4x4.
Obviously, the vehicles have been in research and development and production for the last 3-4 years. So they launched in several countries in Africa. We are happy to be the first in West Africa. We launched in Ghana today. Hopefully we will launch very soon in Senegal as well. Basically, it's to fulfill the market segment for a very genuine and capable and reliable off-roader, 4x4 vehicles. So looking at individuals who like adventuring, going on treks, or if it's hardcore users like people in the mines or construction companies who really need a very solid and dependable car on site. So it has a limited potential, but good potential to fulfill the needs for those customers.
Baroness Catherine Hoy, the UK's Prime Minister in charge of trade envoy to Ghana, expressed excitement about the level of collaboration between Ghana and the UK in terms of trade.
I mean, I'm very pleased that I've been able to see the launch of this, which is a British-designed vehicle from a company that has got so much credibility all over the world, and to be working here with Ion Motors now and getting it across to be used, I hope, in Ghana, is only going to do further relations between Ghana and the UK, and you know that's what's important. This is just I think a wonderful example of innovation and I think hope, and I hope to come back next time and see lots of them driving around Accra.
The Ineos Group has invested over 1.5 billion euros with a long-term goal of developing several products, including a double-car pickup by next quarter and an electric 4x4 in 2026. The Grenadier is a pure modern 4x4 with a British design which German engineering built for Africa.
That'll be all for tonight. My name is Emma Davis. For more business news, do log on to myjoyonline.com. Up next is Prime Sports. Please stay.